How's it going, Mullen fans? Another brutal day. Down to 675 as a closing price, which is near all-time lows for the stock. This is in spite of recent news around, Bollinger receiving the equivalent of the full tax credit of up to $40,000 for their vehicles, which obviously Mullen owning 60% of the company that is beneficial for. It's just, the company's in general, Mullen, not Bollinger per se. Bollinger's a bit more of a closed book, but Mullen is in dire straits, I suppose. We're wearing $1 billion loss for last year. We're not seeing any meaningful, sales coming through the pipeline. That's something that the company really needs. The company as a whole with their core range, they need to start seeing, some more meaningful sales make it on the books. Obviously, they're delivering vehicles for their existing sales, but we want to see more demand for their vehicles. Right now, we're only looking at like a little bit over 1,000 vehicles officially ordered. So it's not big numbers considering how much money the company has invested. Obviously, their investments have gone into all different areas, and my long-term criticism of Mullen is that they've tried to do too much too early on and stretch their financial resources. They need to really knuckle down on one or two things and do them really well, and then start to expand from there. They've tried to do all the expansion before actually being a viable company. Now, really interesting thing about MULN Automotive is now that they are NASDAQ compliant again, they are able to freely raise more money through the market, and that is obviously one of the things that a lot of investors are spooked by, because to cover these huge losses that the company's running at, and to sustain the ongoing expenses of the company, they need an injection of cash, and they can do it through debt or equity raisings. The company's already done one debt raising, a short-term one, which it's terrible conditions for the company. It's like basically just throwing away millions of dollars for short-term growth. And I think what that is to buy the company time before they can actually do larger equity raising, and just further obliterate existing shareholder value. The current market cap for the company is like $50 million, and there's a good chance they're going to have to raise a lot more than that this year. Granted, they are getting revenue now as vehicles are delivered to Randy Mary, but I don't think the rate that they're delivering the vehicles and the revenue coming in for it is going to cover the ongoing operating expenses of the business. So it's really hard to say what needs to happen right now. Like, it's obviously we've got a lot of tough things coming down the pipeline. It looks like we're going to have some huge dilution event coming this year. When, I don't know, probably not long before or after they have to pay back the short-term debt obligation that they've entered into. But at the same time, we have revenue starting to come in the books, and it'll be coming when we see the next quarterly update. We will start to see more meaningful revenue booked in, and then we've also got the news that obviously Bollinger is going to start delivering too, and through ownership of that, there's going to be some benefit to MULN Automotive. How that shows up in the revenue is going to be interesting, because Bollinger is sort of a separate entity. So I guess you could sort of look at it as the value of that entity might increase on paper, but being a privately held company, that's can be a harder thing to measure. But we'll have to just keep an eye on the books for that, I guess. So I think we need to see sales. That's the big one. We need to see the company stop frivolously wasting money. They need to see cuts in expenses. They need to see I think one of the big things they really need to address is how David Mitchell is being compensated. The guy's been given a ridiculous number of shares over the years. At this point in time, you'd have to say he's like the world's dumbest CEO. He probably should have paid himself more in cash than shares, because the shares are haven't done too well under his tutelage. But it's his company. He's sort of the brains behind it and running it, and I think he's actually kind of one of the starters, or the starter of MULN Automotive. I don't know the exact origins of the company, to be honest, but he's kind of wearing some heavy losses. But the fact that he hasn't up sticks is something good. It means he's still got some faith in the company. But it's gonna. I think it's kind of a wait and see how things go, and hopefully we get some sales, and hopefully the company can effectively rein in some of those expenses. and you know, pray for Bollinger being a success, so that these new ventures that Mullen Automotive is going into prove to be successful, hopefully. So fingers crossed for Mullen Automotive. It's never really seems to be good news when I do these videos, but anyway, back on it. Hope you're all doing well. Until next time, may the markets trade in your favor. Cheers.